Going to check now the top business news stories. Brian Quinn joins us now. Hi there, Brian. Let us begin in Australia because Facebook and the government there have refriended each other. They defriended themselves earlier in the month. That's as because a deal is going to see the social network stopping the blocking of news content. Tell us more.
Indeed, a big kerfuffle down there. Facebook now, though, set to start allowing Australian news to be shared on its platform in the coming days. That after negotiating changes to the government's plan to force tech giants to pay for news content. Well, the week-long standoff over that plan had led to Facebook blocking news content for users down under. Canberra has agreed to 4 concessions in its proposed bill. They include adding a mediation period of 2 months in situations where tech giants can't reach a deal with publishers. The dispute is being watched by lawmakers in other parts of the world who are considering similar laws. Facebook says the agreement will allow the company to support the publishers they choose and that they won't be automatically subject to, quote, forced negotiations with them. Australia's finance minister says the dispute is a proxy battle in the worldwide fight over funding social news on social media.
Absolutely critically, the code maintains its key measures. Namely, it's a mandatory code, a world-leading code. Secondly, it's based on two-way value exchange. And third, it involves a final offer arbitration mechanism.
On to Brazil next, where Petrobras shares are bouncing back from a massive slump Monday. The state-controlled oil giant stock has bounced back over 9% on Tuesday. That's after plummeting, though, more than 20% yesterday as the company lost some 10 billion euros in market value. The crash came after President Jair Bolsonaro ousted Petrobras CEO Roberto Castello Branco, announcing plans to replace him with a retired army general who has no experience in the oil and gas sector. Bolsonaro had feuded with Branco for raising the price of gasoline and diesel, a move that angered Brazilian truckers, who make up a key segment of the president's base. The ouster marks a troubling return to Petrobras' use as a political tool, one that's hit not only its share price, but also the Brazilian currency.
Então tem impacto na economia muito grande quando há uma ingerência e o mercado se desarruma, né? Então ele precisa compreender melhor isso e precisa ter pouco mais de sensibilidade de como é a dinâmica da economia. Não é tudo que ele quer e como ele quer que seja.
I'm checking in on the wider markets now. Wall Street in the red, rising a bit from session lows, though, on investor relief. That after Federal Reserve Chair Jay Powell told Congress that a, quote, highly uncertain economic outlook means interest rates are unlikely to rise in the short term. The Nasdaq, though, deep in the red, down 1.5% as a sell-off in big tech shares continues. European indexes finished the day mixed. Shares in HSBC closed down over 1% as the bank reported a 30% drop in profits last year. London's FTSE 100, though, still ending the day in positive territory as the UK agreed to extend the EU's deadline for ratifying the Brexit trade deal by 2 months. Bitcoin continuing its slide, falling as low as $45,000 after U.S. Treasury Secretary Janet Yellen called it highly speculative and extremely inefficient. Cryptocurrency currently trading around $46,800 each. Finally, for business, the UN's Labor Standard Agency says workers' rights are under severe threat amid a boom in online work. The International Labor Organization's latest report says digital labor platforms have increased 5-fold over the last decade, underlining the need for international policy coordination and regulatory cooperation to better protect gig economy workers worldwide. Mario Sofas reports.
A 5-fold increase in digital labour platforms over the last decade. Growth that has created new job opportunities and provided flexible work for women, people with disabilities and those in developing countries. However, as outlined by the International Labour Organization in its latest report on the state of global employment, many gig economy workers are poorly paid and lack access to traditional workers' rights, such as health benefits and collective bargaining.
There is a need, and it's an urgent need, for international policy discussion and coordination that would be, I think, crucial to find common regulatory solutions and to reinforce the fact that universal labour standards are and must be applicable to everybody, to all working people. What is unacceptable in the analogue world of work should also be unacceptable in the digital one.
On the whole, platforms classify workers as independent contractors, with their rights dependent upon the platform's own terms of service and not employment law. Last week in the UK, the tables turned for one major platform, Uber. The British Supreme Court ruled that its drivers deserve more protections than the company was willing to offer. The court classified Uber drivers as workers, meaning they're entitled to benefits like minimum wage, working time protections and holiday pay. The COVID-19 pandemic has made platform work more relevant than ever, speeding up the shift to a digital economy. With sweeping job losses, millions have taken up gig work.
Definitely hard to argue that the digital economy has not changed a great deal in recent times, so probably time for some revision there, Tom.
Yeah, a definite software update is required, I think, there. Thank you very much indeed, Brian Quinn from the Business Desk. Thanks for that.